While members of Congress and the White House plan to work through the weekend hammering out a deal to raise the debt limit, investors may want to use the weekend to prepare their portfolios for whatever kind of plan or non-plan lawmakers come up with, or if they fail to reach a deal. Dominic Chu is taking a look now at what the experts say to do with your money now. What are you finding, Dom?
Well, it's interesting because there's a debate in Washington, but there's a huge debate going on in the markets. There's an undercurrent. There's a lot of push and pull, a lot of buyers, a lot of sellers. Now, obviously, the last 2 days, the buyers have won. But there are three different schools of thought. One is maybe run for the hills, but not all the way. So they're saying, you know what, Miller Tabak's equity strategist Matt Maley says, hey, take some of those profits. If you've made money in the market, why not sell some of that off and reap some of those benefits? Now, there's also those who say, hey, you know what? Stay bullish, all right? Stay right where you are and jump right in, buy more stocks. In fact, a pullback is huge. I was speaking to Alan Nuckman at Trading Advantage. He says, if there's a pullback, I want to buy big blue chip names. Jump right in. He likes Coca-Cola. He likes Microsoft. So these big blue cap names that pay a dividend. But then there's those who say, you know what? Stay put. Don't worry about it. It's not going to have a long-term effect, a lingering long-term effect. These guys in Washington are going to figure this out. So stay put. This should not affect your long-term portfolio plans. Sarat Sethi's a top-performing portfolio manager at Douglas C. Lane. That's what he says.
Are your sources telling you that this market is vulnerable to headline risk, most especially? Because if headlines come out over the weekend that the talks are stalemated or breaking down, right, and boy, we're going to have a lot of the Sunday talk shows focused on this, I would think Monday morning's open could be a rough one.
Well, so here's the thing. It can be a rough one to the upside or the downside.
Sure.
When we think downside, we say, hey, if there's no deal done, maybe the market sells off. But then you should have been positioning for that beforehand. But it could also be that on Sunday morning, we get a great grand bargain and everything goes higher. No matter what, you got to pick a path. And that's what traders have been doing over the course of the past week.
Do you think that this Monday partial holiday for, banks are closed, markets are open, some businesses are closed, could work for or against the markets? What did you hear?
Well, it's interesting because liquidity won't be a concern. Stock markets stay open, so that'll be interesting. We already had two good up days for the Dow. We'll see if it continues on Monday.
That'd be nice.
All right, Dom, have a great weekend.